Good day, everyone, and welcome back to Sterlinx Global. As always, thank you so much for tuning in today. My name is Arful, and I'm the founder of Sterlinx Global, a UK-based accounting firm specializing in e-commerce and local businesses. If you're new here, thanks for being with us. Thanks for tuning in today on this channel. We discuss various pain points and challenges that our clients usually have. But of course, we also offer valuable insights about these things as well. And if you have a few questions of your own, don't hesitate to reach out. We are more than happy to answer them for you as well. For today's topic, we will be tackling the UK corporation tax system. Now, let's dive into our quick guide to the UK corporate system. UK, as the United Kingdom, like every other country in the world, has a corporate system regime that it applies to incorporated companies and other bodies that include clubs and associations. Mind you though, it's not applicable to trust as well as partnerships and individuals. So the corporation tax is slightly different. It belongs to the actual incorporated companies only. At present, it does not apply to foreign or non-resident companies as well as landlords that receive rental profits from the property they own in the UK, and says they are subject to income tax rules. Obviously, the foreign companies, will pay their own corporation tax in their own countries. That's why you don't have to pay a corporation tax in the UK if you do operate a business which is registered, a company which is registered in another country, just like if you have got a LLC in the USA, or if you've got a limited company in Germany, Spain, France, Italy, or in Emirates, or maybe Hong Kong. You're not going to pay corporation tax in the UK for those companies because you are liable for corporation tax for those companies in the country where it is registered. This corporation tax regime in the UK can be described as a self-assessment regime. Now, which means that taxpayers are responsible for calculating their taxable profits as well as reliefs, which may be applicable in any period. Similarly, rules on tax adjustments are necessary rules on anti-avoidance rules from Her Majesty's Customs and Revenues, which is in short, as we know, HMRC, right? So HMRC is the actual ruler, the government body, the government of taxations in the UK. There are some specific tax benefits as well as specific rules that may apply to a group of companies. Meanwhile, every entity is required to prepare a tax return in order to calculate its tax liability. It's not currently possible to submit the group's tax return. So what exactly are the important things you should know about the system? First on the list, who is included in the UK corporation tax? Companies that fall within the UK corporate tax regime are regarded as tax residents in the UK. Now, provided that they are permanently established, a tax resident is used to refer to a company that is incorporated in the UK. So as a person, you're not, but if the company is registered or established or incorporated in the UK as a UK limited company, then it is a taxable company in terms of the incorporation or corporation tax that we have within the UK. This is the case in the absence of a treaty that allows double taxation for the company in another country. Specific tax advice should be sought in such circumstances. Rules on permanent establishments. Companies that are non-resident in the UK are equally subject to corporation tax, provided that they have activities in the UK which are the same as that of a UK establishment. It equally takes into account double taxation. Now, corporation tax is imposed on permanent establishments in the UK, but this is limited to profits that are derived explicitly from the UK. Who here knows how to compute their corporation tax due? It's not a simple matter or a simple question that I just asked. I do apologize. But if I was to ask some of you guys, right, who would know? And who would know to do that? Who would know to complete the actual corporate tax due, right? Well, most of you would answer no, because it's a complicated situation. So it's no different for all of our clients, really. So that's okay, because it's quite complicated unless you have been doing it for quite a while. So how do you establish your tax obligations? Easy. This is an easy suggestion here. So work with a professional team from Sterlinx Global, of course, and we are always going to recommend ourselves, because we know we're doing a great job for our clients with amazing feedback. We've improved people's stats, and we love our job. We've got great, amazing passion for it. For our third point, calculation of corporation tax. Now, corporation tax is usually designed to ensure companies pay the right amount of tax for the accounting period based on their financial statements. However, there are usually, exemptions for when a company starts its operations, or if there is a change to the accounting system. Now, for accounting periods that exceed 12 months, HMRC requires more than one tax return. So how does that scheduler system work? Under the schedule system, a company's worldwide profits are subject to UK tax. Now, that's only relevant to a company that's based in the UK, or you are from somewhere else but you have incorporated a company to establish within the UK, right? And you want to trade globally using the UK limited company. So your company is based in the UK. It does not matter where you're based, guys, all right? That's, disregarded. And tax reliefs are available in part or for all of its foreign income. So if you've sold anything outside the UK, it's definitely taxable in the UK, and you have to declare that. The current system of taxation identifies number of sources of income, and there are subtle differences at times. These sources include but are not limited to income from trading activities. Now, property businesses, activities, and non-trading profits or losses that could result from a loan relation, for example, the interest bank receive. Meanwhile, expenses for management and dividends are equally included in this category. Fortunately, the UK tax system isn't always about taking money from companies. Are you surprised? In fact, our next point is tackling just that bit. UK tax incentives and tax deductions. Each budget tends to have a range of tax incentives to ensure that businesses can operate properly and support domestic economy activity. They include tax credits as well as allowances for research and development, which is the R&D. Under such a scheme, the relief the company can claim is contingent on its size as well as its activities. The SME scheme, which is a small medium enterprise scheme, allows for deductions for up to 130% of the qualifying R&D expenditures. If the company spends £100, you will receive £230 worth of tax relief, and that is amazing. Meanwhile, not all investments in R&D are productive or lead to marketable products in the marketplace. Sometimes such R&D investments may result in losses, which are calculated at 14.5% of the loss in question. As a result, the total R&D credit can be up to 33.5%. You can find more information here in HMRC. I'll put a link if you're following in the blog, and you'll find more information about it. So HMRC is currently consulting on how to merge R&D tax from SMEs as well as large companies. In the past, both schemes were separate, but it is judged to be insufficient. The consultation in question is used to determine the viability of the scheme and ensure that only businesses that are innovating in the UK can benefit from such scheme. here is another upside related to corporation tax, which is the patent box, right? If you don't know the patent box that enables companies to apply for a lower tax of corporate tax on their profits, which may arise from exploiting the dividends or payouts from patented innovations in the UK or across the world. These rules were first phased in from 2013, which is a while ago, right? As well as April 2017. So when the relevant rate is at 10%, this is considered generous relief, as its definition is quite drawn to include a range of activities. If you are in the creative industry, know that there are available tax reliefs for you as well. Tax relief for creativity industry. Such reliefs are described as solely designed for the creative industry and enable qualifying companies to reclaim a larger deduction on possible tax repayments in a manner similar to R&D relief cited above. The R&D relief that I just explained is similar to the actual tax relief, for creativity industry. Now, there are 7 reliefs that are available, to businesses. These are film tax relief, you've got animation tax relief, high-end television tax relief, video games tax relief, children's television tax relief, theater tax relief, orchestra tax relief. Then you've got museums and galleries exhibition tax relief. Obviously, you have to speak to R&D specialist who specializes in that. We personally don't, but we do have a partner we can refer you to if you do come to us for some advice. But paying corporation tax. So since I've covered quite a few different topics, let's move into how to pay for corporation tax. How do you pay corporation tax? Companies are required to settle their corporation tax liability electronically, and there are currently a number of options that are available to them. So once the corporation tax has been submitted, your accountant or ourselves should be able to instruct you that this is how you pay, or this is the site you go into, log in, and simply look at the bank details they have provided from HMRC and make the payments accordingly. So people do this on a day-to-day basis, so I don't think it's going to be a big deal. If you need professional help, check out Sterlinx Global, which is ourselves. Let's do a rundown of what we have discussed so far then, since it's been a long session. So corporate tax only applies to corporations and not to trust, partnerships and individual taxpayers. It covers corporations based in the UK. Non-resident businesses are still subject to tax, but only for profits derived from activities in the UK. And if it's confusing, ask a tax professional from our team. We'll be more than happy to help you out. There are tax reliefs, intensives, and dedications that may be applicable to your organizations. So yes, it pays to know about these as well. You can settle tax obligations electronically, and no need to head to tax offices to pay anymore. Like in the past, we used to work with pen and paper, take some cash or a checkbook and pay by queuing up. You don't need all that anymore. Things moved on, right? So convenient, isn't it? So while that's a lot to take in, I'm sure you still have a few questions in mind. Now let's talk about some of the commonly asked questions related to the tax systems. What are CFC, or Controlled Foreign Company rules? The CFC rules have been in place for a number of years and were equally revised as part of the corporation tax roadmap reforms. From January 2013, a CFC can be described as a non-resident company that is subject to UK taxation system. So if you're an Amazon or eBay seller based in the US selling in the UK, then you are subject to the CFC rules. What is diverted profits tax? This is a separate tax from the UK corporation tax. The rules are intended to prevent profit shifting from the UK to other jurisdictions. So they are equally designed to prevent tax evasion from companies with no UK presence. What is transfer pricing legislation? Last question. So the transfer pricing regulation in the UK applies to transactions between two or more connected persons and requires calculations of profits and loss to be calculated at arm's length. Any tax advantage must be accounted for and included in the company's corporation tax calculations. So yes, that's above everything about the UK tax system. And if you need professional advice or assistance, the experts at Sterlinx Global, which is ourselves, are ready to lend a hand. We are more than happy to help. So folks, that's all for today. We hope that video gave you a bit of an idea about what to expect from the UK's corporate tax. It can be a little bit confusing, which I totally understand. You're not the only one. Our brief guide has hopefully helped you and pointed you in the right directions. So if you enjoyed our tips and tricks or want to learn something more similar, please like, follow and subscribe to our media channels. Again, this is Arafal of Sterlinx Global, and I hope to catch you on the next one. Thanks a lot guys. Bye bye now.